David Bahnsen with me for this entire hour. All right, David, I said at the top of the show that there's a sell-off because interest rates are rising. You're going to contest that, aren't you?
Well, sort of. Interest rates rising can be a good thing when they're going up for the reason they are now. Strong economic data. Why would anybody mind a good economy, good jobs? The issue is valuations, Stuart. When valuations are so stretched, interest rates going higher make stock prices vulnerable.
Are you suggesting that the tech stocks in particular are way overvalued and maybe in bubble territory?
Well, before we
I don't want to put words in your mouth.
Before we use the B word, bubble, there's no question that valuations are overstretched. That's indisputable. They're far higher than their averages. Now, they've grown well. They have some of these tech companies have good fundamentals. Some don't. But yes, they're way too expensive.
Okay. What do they come back down to? You going to tell us?
No, I'm not, because it's different company by company. Some are more stretched than others. You notice Microsoft was only up about 13% last year. NVIDIA was up 150 or 160%. So there's different things that have gone on in different companies. I do believe that the multiples are too high. They have to correct. But we also have to see how the whole year goes, what their earnings growth looks like this year.
Well, we're coming up for the earnings period, I believe.
Yeah, they're going to report fourth quarter earnings in the first quarter. I'm more looking ahead because markets look ahead. I think expectations are too high and the price too high for high expectations. That's a double whammy. That's why I think they're very vulnerable. 2022 comes to mind, where tech got hit and a lot of defensive and fundamental strong sectors did real well. You notice even today futures, the Dow is barely down a little, NASDAQ's up a lot. I think we have a lot of days like that this year, where the Dow may not be great, but it isn't down as much as the NASDAQ.
You've often given me financial advice in the past.
Yes, I have.
You want to tell me to sell my Microsoft?
Well, it all depends on tax ramifications, big picture. You've done very well in your Microsoft. My whole belief is I just want index investors to know that these big tech companies right now, the top 10 companies, are 40% of the S&P 500.
And that's too much.
Well, it's brutal. Brutal. I mean, we really have a market very tethered to NVIDIA. Yeah.
David, thanks for being with me for the hour. Stay right there, please. Yeah. Governor Newsom issued a new executive order. He is suspending some onerous environmental regulations to help rebuild. Watch this.
I'm worried about issues of rebuilding as it relates to scarcity, as it relates to property taxes, meaning scarcity of resources, materials, personnel. I'm worried about time to getting these projects done. And so we want to fast track by eliminating any CEQA requirements. I've got Coastal Act changes that we're making. I want to make sure when someone rebuilds that they have their old property tax assessments and that they're not increased. So all of that's been done in the executive order we just announced.
David Bahnsen with me this morning. From your perspective, is this the kind of, you're sighing and shaking your head, is this the kind of regulatory change that California really needs?
Oh, this is table stakes. That's the most basic of things he could do. What he could start by doing is acknowledging that all those regulations he's talking about were part of the problem to begin with, Stuart. Now, I'm not going to sit here and do the political thing blaming him for all of it. There's a human disaster here that's most important. But he does need to take responsibility. Those environmental regulations, he doesn't even need to say the property tax things. That's part of the law anyways. You don't get reassessed rebuilding from a natural disaster. So he's trying to take political credit for something that's totally ridiculous. But all of these delays to get approvals to rebuild, that should never be there to begin with. They've made the state a regulatory hellish nightmare.
If you want to deal with the housing crisis, the housing shortage in other states, this is what you've got to do.
You have to make it easy to build new houses.
Yes. At least he's starting to do that. David Bahnsen, stay there, please. More for you later. Check out Tesla. The news here is that Europe's largest pension fund sold their entire stake in the company. You're laughing, David, aren't you? There's Europeans. What are you going to do with them?
The market cap is $1.3 trillion. They sold $580 million. That was their lunch budget last week.
Why am I not surprised to learn that Moderna is experiencing a lack or a decline in vaccine demand?
Yeah, shocking, right? They lowered their 2025 sales guidance by $1 billion.
I'm not surprised. What about you, David?
I just can't believe when that stock was at $160, they didn't go buy other companies. They have two products. Why didn't they diversify when they had an expensive stock to buy other?
All right. Good question. And they're down 20%, down to $33 a share this morning. That's quite a comeback, I gotta say. Tell me about Bitcoin. I think last time we checked, it's 90,300.
Yeah, so remember, our peak in December was 108,000. So as crypto falls, some of the crypto-related stocks fall with it.
Does David Bahnsen have anything to say, good or otherwise, about Bitcoin and cryptos?
No, I have nothing good to say, and therefore nothing to say at all.
Ooh, okay.
Ponzi's can go on for a long time.
Oh, that says it all. A Ponzi scheme. Oh, okay. Anything to say about my grandchildren and where they shop, David?
Well, no, and I don't have grandchildren, but I have teenage kids and college-age kids, and so this is just a very difficult, fickle area because you're relying on consumers that change their mind every 6 months.
Every 6 months? Get out of here. Faster than that.
Well, that may be right, but even faster than 6 months, yeah.
David, you've got a couple of dividend picks. Start with UPS.
Yeah, speaking of things that don't change their mind every 6 months, how long has UPS been one of the leaders of delivering freight packages? It had a bad year last year. We love stocks that had a bad year that are great companies. 5.5% yield, Stuart, which I know you love.
5.5%?
Growing it every year. Cash flow positive. UPS to me is a great value buy. We've thoroughly researched it. We just added it to our dividend portfolio last week.
5.5%?
Yes, sir.
At that price, at 121.
That's correct.
Not bad. Then you've got something called Vici, V-I-C-I, Vici Properties.
And you may think you haven't heard of it, but all it is the real estate from Caesars. They did a spin-off. They also own all the real estate down at Chelsea Piers here in New York City. It's a REIT that owns all of this brick-and-mortar wonderful properties. They didn't miss a single rent check all through COVID, and it's paying close over a 6% yield.
6%. Now you're really talking. That's very good, David. Raising the SALT deduction. Is that just pure politics, or is it bad and bad policy?
Yeah, well, I'm with Steve on this one. It's very bad policy, and yet, you and I are people that paid higher taxes because of it. Right. However, he's right. They don't have the votes without doing it. They can't have any House Republicans in California and New York not vote for what they want to do. So they're going to have to do something there, and I think he's right. They're going to go to 20,000 and index it to inflation going forward. Yeah. But the key issue is that it's unfair to red states that manage their fiscal affairs better to be subsidizing blue states that don't.
Yes, you're right about that. Thank you, David. And David, we really appreciate you being with me for the last hour.
Yes, sir.
You have some contrarian opinions on the market. I see. Look at the Dow. It's now up 130 points. NASDAQ still down 221. Thanks for being with us, David. Thanks.